Welcome to Talk Tickers. So SL Green, New York's biggest office landlord, just had their Q4 2025 earnings call, and wow, it was a big one. They're making a massive bet on 2026. Today, we're going to break down their high-stakes game plan and, really figure out what it means for the future of New York City real estate.
And you can see the market really ate it up. The stock popped more than 2%. So what's going on here? Why did investors like what they heard, especially when the headline numbers were, let's be honest, kind of messy? Let's unpack it.
This right here, this quote from CEO Mark Holliday, it perfectly frames the entire call. Management is basically saying, hey, Wall Street, you're missing the point. There's a huge disconnect here. And they spent the whole call laying out their case. So that's what we're going to do. We're going to dig into the numbers, walk through their strategy, and then, at the end, we'll give you our take on whether they can actually close that gap.
Okay, let's get right into it. The results. A quick snapshot. And like I said, the headline numbers were a bit of a mixed bag.
So you can see right away it's a split decision, right? They beat on what's called funds from operations, or FFO, but then you see this big GAAP loss and a small miss on revenue. So the big question for any investor is, which one of these numbers actually matters? What should we be looking at?
And here's the answer. It's really a tale of two different stories. On one hand, you have the accounting story, that big GAAP loss. But that includes a lot of non-cash stuff, like asset value adjustments, that can make things look weak. But on the other hand, and this is the important one, you have the cash flow story. That's the FFO. For a REIT, FFO is king. It's the metric that tells you about the actual cash the business is generating. And the fact that it beat expectations, well, that told the market the core business is actually doing just fine.
So that beat on FFO wasn't a fluke. It was really backed up by some strong operational performance. Let's talk about leasing, because management kept pointing to this as the real engine of the business.
And yeah, these numbers are pretty solid. I mean, look at this, 93% occupancy in Manhattan. That's really leading the pack. They signed 2.6 million square feet of leases for the whole year. But the key thing, the thing investors got excited about, is that the momentum is still there. They're already off to a great start in 2026 and have a pipeline of over 1 million square feet in active talks. That's huge.
And this is where that confidence comes from. Management is basically saying, look, we are already on our way to hitting our big goals for this year. They aren't just crossing their fingers and hoping for tenants to show up. They're seeing real demand, and more importantly, they're turning that demand into signed deals.
Okay, so this brings us to the real heart of the story. This is the big plan for 2026 that got everyone talking. And believe me, it's ambitious. This is really where the bull and bear arguments are going to clash.
First up, a massive, and I mean massive, $7 billion capital markets plan. A huge chunk of this is refinancing major iconic properties like One Madison Avenue and 245 Park. The goal here is pretty simple: strengthen the balance sheet.
Next on the list, they're planning to sell $2.5 billion worth of assets. Now, this isn't a fire sale, it's all got recycling capital. Sell some buildings to raise cash, pay down some debt, maybe reinvest in other opportunities. They're telling us to expect most of this to happen later in the year. And all of this, the refinancing, the asset sales, it's all in service of this one big goal: hitting an incredible 94.8% occupancy by the end of the year. So you can see the strategy, right? It's a three-part play. Shore up the finances, sell what you need to, and keep leasing like crazy.
Now, as you can imagine, the Q&A with analysts was pretty intense. They really honed in on two big questions, two big debates that aren't just about SL Green, but about the entire future of the New York office market.
So question number one was the big one on everyone's mind. What about AI? Is artificial intelligence a threat that's going to let companies shrink their office space, or is it actually an opportunity that will create new demand? And management's answer was, well, it was emphatic. They said, we are seeing zero evidence of tenants downsizing because of AI. But, and this is the kicker, they are seeing what they called exploding growth in demand coming directly from AI companies. We're talking about millions of square feet of active demand right now. So for them, AI is a huge net positive, a new engine for growth.
All right, the second big topic was global capital. Basically, where's the money coming from? And this is so important. Because remember that big plan to sell and refinance billions of dollars in assets? Well, for that to work, you need deep-pocketed buyers and lenders.
And again, management came out swinging on this one. The CEO had just gotten back from a 10-day trip in Asia, meeting with all the big players, sovereign wealth funds, you name it. And his message was crystal clear. The appetite to invest in New York City is as strong as he has ever seen it. Period.
So, we've heard the numbers, We've heard the plan, we've heard the big debates, so what does this all boil down to for the stock? Let's get to our final outlook. The next call.
Okay, here's our tick. First, for next quarter, we're expecting their FFO to be pretty much in line with expectations. The narrative is going to shift completely away from leasing and on to execution. It's all about watching for those asset sale and refinancing announcements. Second, price action. We think the stock is probably going to be stuck in a range for a bit, bouncing around with news on interest rates. The real pop will come if, and it's a big if, they announce an asset sale at a really great price. That would be a huge catalyst. So, that brings us to our rating, market perform. Look, the strong operational story, that FFO beat, that's all priced in now. The market gets it. Now it's a show-me story. The whole thing hinges on whether management can actually deliver on this incredibly ambitious capital plan for 2026. The potential is there, but the execution risk is real.
And as always, this is not financial advice.